tuning in. I'm I'm on my way to an event, as you can see, but I couldn't resist talking to two experts, considering that we now know almost with certainty the fate of the 5 state elections that happened. The question is whether they really make a material difference to the markets, considering all the geopolitical events and the world events that are on right now, or do they? Let's put that question to two experts, Rahul Arora, CEO of Nirmal Institutional Equities, and Mr. Bhat, co-founder and director at Alphaniti Fintech. Gentlemen, both of you, thanks for joining in. Rahul, what's your sense? They say that the road to Delhi goes through Lucknow. BJP's kind of secured that. Is it a material event for markets or not so?
Good afternoon, Neeraj. Thanks for having me on. So I think obviously from a policy continuity standpoint, it's quite remarkable that the BJP has pulled off 4 successive elections in Uttar Pradesh, the 2017 state election, prior to that, the 2014 general election, the 2019 general election, now the 2022 state election. So it's quite commendable that they've pulled this off. But I think, Neeraj, obviously, if you view this in conjunction with what's happened overnight in the world, it spells good news for equities, because there seems to be a momentary ceasefire, or at least a bit of a realignment of thought process between the two warring parties. You've seen crude dramatically come off from that 130.35 down to sub 110, and it does look like the US may push back on its rate hike a little bit. So I think if you put all 3 things into perspective, I think today equities are sitting in a far better place than we probably were 48 hours back.
Most certainly, Mr. Bhat. So would the credit of this go entirely to what's happening around the world? And would the equity markets have behaved this fashion, considering how beaten down they were, irrespective of the UP election verdict? Had it not been as smooth for the BJP, you reckon the markets would still have been in the cheerful mood because of what's happening around the world?
Well, I think the UP results, the results across all the states, were not exactly surprising, because even the opinion polls had suggested that, and I think that was the sort of base case, that they will make it in at least 4 of these 5 states. And they will make a presence felt in the 5th state. And I think that's exactly how it is probably turning out to be, even though we don't know exactly about how Goa and Tripura will shape up eventually, but I think they will probably retain power. So to the extent there was no surprise, I don't think this is a big event for the market. Only if it was a surprise, it would have been a big event. But the fact of the matter is that what happens in Ukraine is more important, I think, from a geopolitical point of view, and of course, especially from the oil point of view, because whenever oil has been well above 100, I think the market has never performed well in India, and there is virtually a sort of negative correlation in oil prices and stock market prices in India, at least. So I think the fact that it has come down quite remarkably over the last, say, 48 hours is a very good indicator for the market to really start reviving, as we have seen. But I think we will have to see how it goes, because there is no truce called as yet. But they are back at the sort of table for talks. That is a very important thing. But the other point, I think, is the US has sort of pushed the envelope a bit too far. It looks like as if on oil and gas there is no meeting of minds between Europe and US. So therefore, that is something that the market will probably take it, because Europe depends quite substantially on Russian gas. So it can cut both ways. So therefore, they are not prepared to sort of forego that in the larger interest. I think their economic interests are paramount. So, sum and substance is that what the Ukraine faced very closely, that's more important than anything else, given that the state results are already behind us now, and it is broadly on expected basis.
Yeah, just purely, Mr. Bhat, a quick follow-up there. To this event would be that if indeed the global landscape behaves this way, and if indeed the markets did not react in any fashion materially to what is the largest state election verdict, you think then if indeed the global volatility stays as is, do you think the other domestic events kind of take a bit of a backseat?
Yeah, I think today, as of now, that is the major sort of consideration. Oil prices, Ukraine, what happens to the US Fed sort of action. These are more important than domestic, because domestic, there is no great news flow except this state election that is already behind us now. So there is nothing much now to expect. The next series of elections are quite some few months away at least. And so they, although of course all said and done in India, we are on election mode almost 12 months a year. But this time I think there is a respite for at least a few more months. So therefore, I think there is nothing, and the budget is done and dusted, and so therefore there is really nothing much. And even what everybody expected, that oil price will go over 20-30 rupees immediately after UP election, that has also not happened. So therefore, I think to that extent, the news flow has been reasonably well managed. So therefore, I think we really have to look at Ukraine and the Fed from now on, and oil prices.
Actually, that's a pertinent point to Rahul. You expect that the tinkering is done and over, or one can never say never when it comes to oil. But and then a follow-up, Rahul, to that is that not that, I mean, just purely from somebody who watches not just the world but watches the government's actions closely, in some fashion, is this a big positive that there will not be too much of populism measures, and whatever reform processes that the government is on, they will now have renewed vigor to keep at that, finances permitting?
So, Neeraj, a two-part question. So, I think on the first part, I think, had we had this conversation 48 hours back, there was probably a genuine threat of oil going up to about $140, $150 to the barrel. I think now that base case is virtually out of the window. I think the question is, how much can it drop from here? I think I'm not saying that it will not rise from here. It could well go back to 120, but I think those projections of 140, 150 have been put to rest. And I think we may be positively surprised having this conversation 3 months from now, where I wouldn't be surprised if crude actually drops all the way back to somewhere between $80 to $90 to a barrel. Now, obviously, Indian companies have their inventories and they've done their negotiations. And obviously, the subsequent negotiations will be at higher prices because crude's gone up from almost $75 and change. But my sense is that incrementally, this threat on demand more than a quarter out and price increases, I don't think we'll be talking too much about that. So I think most of it is in the price in terms of earnings cuts and so on and so forth. And I think the market will be very happy with that contention. To the second part, Neeraj, I think I attended a 4-hour session last night, which actually began with the Prime Minister. It was an event organized by Deepam, and pretty much everyone from the Government of India spoke. And I was very pleasantly surprised to see the tone, tenor, and body language of the Government of India in terms of executing projects and fast-tracking them. I think somewhere at the back of their mind, the timing of this event was very interesting because, as Mr. Bhat said, the opinion polls had pretty much given the BJP a sweeping majority in Uttar Pradesh any which ways. And we've seen how good Mr. Gadkari has been with his portfolio in terms of the road construction projects that have been doled out. So I think from a capital market perspective, Neeraj, I think it'll be good to bet on infrastructure. And I think the fact that raw material prices, crude and others, went up so dramatically and cement saw such a big fall, I think this concoction of infrastructure and cement could actually end up being a fairly good theme from a capital market standpoint in the next 6 to 8 months. So I think you can't completely ignore the UP elections. I think obviously I do agree with Mr. Bhat that it's probably just a footnote in the context of what's happening with the US Fed and what's happening with Ukraine. But I think in isolation, it's a very significant event. And the fact that cement companies crashed because of rising global commodities, if the UP election was to give an extra thrust to infrastructure, I think these are two pockets of the market that will very positively surprise for this calendar year.
Yeah, I'm wondering also that once the whole noise around this event dies down, and hopefully dies down sooner from a humanitarian perspective, people will start believing that policy continuity will last well beyond 2024. I mean, I spoke to multiple people over the last 2 days after the exit polls were out. They were saying if this turns out to be true, then you kind of believe that 2024, from a policy continuity perspective, remains stable. Mr. Bhat, so the final 30-second question to both of you, or 30-second before we wrap up. Mr. Bhat, to you first. Would you be constructive, considering, of course, the market is no longer as cheap as it was 2 days ago, but certainly on the valuation front, even though it may be a few standard deviations above normal, is a lot cheaper than what it was at all-time highs. Of course, one doesn't know the kind of earnings revisions that will come about over the course of the next couple of quarters.
Well, I think one needs to be constructive. Juxtaposed on, of course, what happens in Ukraine, assuming that the Ukraine issue sort of goes off the front pages and there is peace all around, and the Fed takes its own time to hike rates, thanks to what happens in Ukraine. Then I think we need to be constructive because the market, for all said and done, is corrected about 10-11% from its peak. Not too much of a correction actually, but still, I think valuations continue to be not exactly in the buy range, but nevertheless, markets have been expensive for quite some time now. And if there are earnings revisions that are going to come about, based on, say, March results or something, because all said and done, COVID impact is now sort of ebbing away. So COVID is no longer in the news, and people are functioning almost normally now. Business as usual is happening. So therefore, given all this, I think there could be some sort of a earnings revision going forward, and that could help the buoyancy in the market. So I think one needs to be constructive, but at the same time very watchful what happens on the global scene.
Rahul, same question to you: positive, negative, neutral?
So, Neeraj, I think on current evidence, I think the low that we recently hit at 15,500 on the Nifty or thereabouts, that to me is a bottom. The only risk to that thesis is if my prediction on oil goes wrong, and oil does indeed head up to $150 or $140, then I think all bets are off. And then the question is, how bad can it get? So I think on current evidence, I would be a buyer. I think there are lots of pockets in the market that are still presenting value. The biggest of them all is, of course, the BFSI sector, which has underperformed for God alone knows how long. And I think you could still go in and buy, the Axis Banks, ICICI's, IndusInd's of the world, insurance companies. I mean, there's still, so Neeraj, there'll always be pockets of the market expensive, even at a 7,500 Nifty, and there'll always be pockets of the market that are cheap at even a 16,000, 17,000 Nifty. So I don't think we're at that situation where there's no value. I think you just need to marry value and growth, and there are ample opportunities in the market. I do take Mr. Bhatt's point, and it's well made, that the index itself may be down only 12, 13%. But the kind of carnage that we have seen in stocks, and especially the new age stocks, right? Nykaa from 2,400 to 1,200, Zomato from 200 to 75, Paytm sort of been a one-way move. So at some point, these will become buys, Neeraj, and I think people will go in and buy these names because these businesses aren't going to vanish. So I think you just have to be street smart, managing growth and value, and I think there's more than enough opportunity to make money in this market.
It's absolutely lovely having both of you. Thank you so much for your patience today and for your time and intelligence this afternoon. And all the best and stay safe.
Thank you, Neeraj.
Thank you, Neeraj. All the best.
Thanks for tuning in.
Thanks, Rahul.